Hey, what's up everyone? It's James, and welcome to my channel. This is Stock Market 101, your ultimate guide to understanding how to invest and build wealth in the stock market. In this video, we're diving deep into everything you need to know, from the basics of what the stock market is to actually picking stocks and building your own portfolio. Let's be honest, the stock market can seem pretty intimidating at first. It's like this mysterious world of numbers, charts, and acronyms that make you feel like you need a finance degree just to understand it. But trust me, it's not as complicated as it seems. Whether you're a complete beginner or you've dabbled in investing before, this video is designed to be your one-stop shop for all things stock market. We'll break down complex concepts into easy-to-understand terms, and by the end of this, you'll have a solid foundation to start investing with confidence. So, what exactly is the stock market? In simple terms, it's like a giant marketplace where you can buy and sell pieces of companies, which are called stocks or shares. Think of it like owning a tiny slice of your favorite business, like Apple or Tesla. When these companies perform well, the value of their stock goes up, and you make money. Of course, the opposite is also true. If the company doesn't do so well, the stock price can go down, and you could lose some money. But over the long term, the stock market has historically trended upwards, making it a powerful tool for building wealth. Alright, so you know what stocks are, but how exactly are they bought and sold? Well, that happens on stock exchanges like the New York Stock Exchange and the Nasdaq. Picture these exchanges as giant marketplaces where buyers and sellers come together to trade stocks. Think of it like eBay, but for company ownership. Brokers act as your middlemen, executing your buy and sell orders on these exchanges. Nowadays, we have online trading platforms, which make it super easy to invest. You can pick a stock, choose the number of shares you want, and click buy, just like ordering that late-night pizza. It's that simple. Now you might be thinking, why bother with stocks? Well, the stock market offers a huge potential for growth. When you invest in a company that performs well, the value of your shares can increase significantly, leading to capital appreciation. Some companies also pay out dividends, which are essentially cash payments to shareholders. Think of it as getting paid just for owning a piece of the company. Remember, I'm all about building long-term wealth, and the stock market is a powerful tool for doing just that. Not all stocks are created equal. You've got your common stocks, which give you voting rights in the company, and preferred stocks, which typically pay out higher dividends but have limited voting rights. You'll also hear about large cap, mid cap, and small cap stocks, which refer to the size of the company. Think of it like this. Large cap is like Apple or Amazon, huge companies, mid cap is like a growing tech company, and small cap is like that new startup with a ton of potential. Then, you've got growth stocks, which are expected to grow rapidly, and value stocks, which are considered undervalued by the market. It's important to understand these different types of stocks to make informed investment decisions. Alright, so you're ready to dive into the stock market? Awesome. First things first, you'll need a brokerage account. Think of it as your gateway to the stock market. There are tons of options out there like Fidelity or Vanguard. Just do your research and find one that fits your needs. Next up, research. Don't just buy whatever your friend's uncle's dog told you to. Look into different companies, understand their business, and see if they align with your investment goals. Finally, it's time to make your first purchase. Remember, start small, you don't need to go all in right away. Dip your toes in, get comfortable, and build from there. Now let's talk strategy, because throwing money at random stocks isn't going to cut it. One popular strategy is buy and hold, where you invest in solid companies and hold onto those stocks for the long haul, weathering any short-term market fluctuations. Another good one is dollar cost averaging, where you invest a fixed amount at regular intervals, regardless of the stock price. This helps to average out your purchase price over time. And don't forget about diversification. Don't put all your eggs in one basket. Spread your investments across different industries and asset classes to minimize risk. Now let's talk about the elephant in the room: risk. Yes, the stock market can be volatile. There's potential for loss, but also potential for incredible gains. It's all about understanding your risk tolerance. How much are you willing to lose for the potential to gain? Remember, higher potential returns usually come with higher risk, and vice versa. It's a balancing act. The key is to invest in a way that lets you sleep at night, knowing you've made educated decisions that align with your financial goals and your comfort level. Alright, so you're ready to jump into the stock market? Hold your horses. Before you throw your hard-earned money into any stock, you need to do your homework. Think of it like buying a house. You wouldn't buy the first one you see without inspecting it, right? Same goes for stocks. We're going to talk about two main ways to analyze stocks: fundamental analysis and technical analysis. Fundamental analysis is like looking under the hood of a company. You're checking out their financials, their management team, their competition. You're trying to figure out if the company is actually worth investing in. Technical analysis, on the other hand, is all about charts and trends. You're looking at price movements, trading volume, trying to predict where the stock price might go next. Let's talk about building a stock portfolio, the key to long-term financial success. Think of your portfolio like a pizza. You don't want just one topping, do you? You want a mix of different flavors to keep things interesting and delicious. Same goes for your stocks. You want a mix of different companies, different industries, even different countries. This is called diversification, and it's the best way to reduce your risk. If one stock goes down, you've got others to cushion the blow. There are tons of different ways to build a portfolio. You can go all in on real estate or tech or even sustainable energy. The key is to find what works best for you, your risk tolerance, and your financial goals. Let's face it, even the most seasoned investors make mistakes, but we want to help you avoid some of the most common pitfalls, especially as a new investor. One of the biggest mistakes is letting your emotions get the best of you. It's easy to get caught up in the hype and buy stocks when everyone else is buying, or panic and sell when the market takes a dip. Remember, investing is a marathon, not a sprint. Another mistake is not doing your research. Don't just buy a stock because your friend told you to, or because you saw it on a meme. Take the time to understand the company, the industry, and the risks involved. And finally, don't put all your eggs in one basket. Diversification is key to a healthy portfolio. Alright, so you're ready to dive into the stock market, but you're not sure where to find reliable information? No worries, there are tons of fantastic resources available to help you on your journey. First off, check out websites like Investopedia and Seeking Alpha for educational articles and investment ideas. For stock screening, Yahoo Finance and FinViz are great tools. And don't forget about books. The Intelligent Investor by Benjamin Graham is a classic, and One Up on Wall Street by Peter Lynch is another must-read. Remember, knowledge is power when it comes to investing. So there you have it, the basics of stock market investing. Remember, investing in the stock market is a marathon, not a sprint. It's all about making smart decisions, being patient, and staying informed. Start small, diversify your portfolio, and don't be afraid to ask for help. The key takeaway here is to get started. The earlier you begin investing, the more time your money has to grow. Compound interest is a powerful force, and it can work wonders for your wealth over the long term. Go out there, start investing, and build that brighter financial future you deserve. Hopefully this video gave you a solid foundation to start your investing journey. Remember, the stock market can be intimidating at first, but with the right knowledge and approach, you can achieve your financial goals. Don't forget to subscribe to my channel for more personal finance and investing tips, and hit that notification bell so you don't miss out on future videos. And as always, make sure to do your own research before making any investment decisions.